bro, trust, we're going to get into some complex option strategies that you can't learn anywhere else. No, I'm just kidding. But no, for real, we're going to get into some complex option strategies that will have a beginner confused on whether or not they have a bullish position on or bearish. But yeah, applying delta. So we're just going to touch back up on the slides that we had, and then we're going to actually go into the platform and apply this. So that's what we're not going to do. Anyways, applying delta. And we talked about this. We touched on it a little bit already. What is delta again? Delta in option refers to the measure of the rate of change of an option's price in response to a change in the price of the underlying asset. It's essentially a measure of sensitivity or responsiveness. So this is another thing that really confused me when I first got into the market. I remember with Tom, we would sometimes put on a position, right? I would even put on a directional position, like selling a call spread or selling a put spread. And we're selling these out of the money. And as we know, the further we get out of the money, delta is going to decrease. And then the closer you come to the money, delta is going to increase. So this also lets you know, it just said it's essentially a measure of sensitivity or responsiveness. So if you select contracts that are closer to at the money, they're typically going to have a higher delta. If you select contracts that are further out of the money, further away from the stock price, it's going to have a weaker delta. It's going to have a lower delta, because the higher delta you have on a position, the more aggressive it's going to be. And it's just like the conversation we had the other day, and we're going to touch on it again in this slide. It's if you have a 50 delta and the stock price goes up $2, that's 50 times 2. You just made $100. That is essentially letting us know for every dollar this underlying asset goes up, if your delta is 50, that's how much dollars you will make for each dollar this underlying goes up. So anyways, pay attention to your delta. That's something that's always confused me when I first got into the market, because I would get the move in my direction, but I'm like, why am I making $2 off of having the correct directional assumption? I'm like, bro, it literally made me want to go back to stock. Like literally, because of my lack of understanding, I was literally like, this is literally such a waste. That's how it felt for a little bit. That's one way we can view delta, and delta is represented between -1 and 1 for individual options. For call options, delta typically ranges from 0 to +1. A delta of 0.5, for example, means that for every dollar increase in the price of the underlying asset, the options price is expected to increase by 50 cents, aka $50 in options terms. So again, just to clarify, if we have Apple stock price and it's sitting at $50, and the contract that you're selecting has a delta of 30, and Apple goes up to $53, you theoretically are going to make $90. Why? Because your delta was 30 and the underlying asset went up $3. If it would have went up $4, you would have made $120. If it went up $5, you would have made $150. So that can give you a little gauge on like how much you will be making or how much you should be making as the underlying asset moves up or down in price. So for put options, delta ranges from -1 to 0. A delta of -0.5, for instance, implies that for every dollar increase in the price of the underlying asset, the options price is expected to decrease by 50 cents. So the same thing, just on the opposite end. So that's one way we could view delta. It helps us know how aggressive of a position that we have on. That's one way we can interpret delta. That's one way that we can interpret delta. How also do people use delta? Delta can also be interpreted as the probability that options will finish in the money at expiration. For example, a delta of 70 on a call option suggests a 70% chance that the option will be in the money at expiration. So we just talked about how delta can let us know how aggressive of a position that we have on based off of a dollar move in the underlying. You can also look at the delta on your contracts or your position to let you know what the probability of it being in the money or out of the money. So again, if something has a delta, something has a 70% chance that it's going to be in the money, that lets us know that if we're selling options, we want them to be out of the money. So that's going to give us a 30% chance of something being out of the money. So that's something to keep in mind. So now let's apply those things. Let's jump back into the platform. So let's use SPY. I want to go to a further contract. So we'll go to 45 days to expiration. So right away, let's say I'm bearish on SPY. So if I'm bearish on SPY, I probably want to sell calls because that's a bearish position. A lot of times you will notice, especially a lot of tasty traders, be like, oh, I typically sell the 30 delta. That means that they come out here to their options chain and they click on the contract that has a 30 delta, which I just did. So we're selling the 30 delta and we're going to buy, typically I'll go $4 wide. $5 wide. And that's going to be the delta that happens to be the 22 delta. So I remember sometimes when I would trade with Tom, he would be like, Are you going to sell the 30 delta or are you going to sell the 20 delta? And essentially what he was asking me was how bearish am I? Like how aggressive do I want to be in this trade? Because if I were to say I want to sell the 30 delta, he's going to be like, "Oh, you're a little bit more aggressive." And if I were to be like, "Yo, I want to sell the 20 delta," he'd be like, "Okay, you're not as aggressive." Why is that? Because again, the 30 delta is closer to at the money than the 20 delta is. So that's why by me saying, "Yo, I think I want to sell the 30 delta," he'd be like, "Oh, okay, bet." Or if I would have been like, "Yo, I want to sell the 35 delta," he'd be like, "Yo, all right, you're pretty convicted in this position." So the closer that somebody gets to 50, which is a halfway point, lets you know how aggressive they're going to be on the trade. At the money contracts, it doesn't matter where the stock price is at, we'll have a delta of 50. That's why delta is dynamic, and that's why throughout the duration of your trade, your delta is going to change. Because if the stock price pulls away from where you bought at, the delta is going to change. Why? Because delta is always going to be 50 at the stock price. So if you hear somebody be like, "I sold the 50 deltas," you know they sold their position at the money. At the money, you know, they're literally as directional as you can get, because they're not selling out of the money. They're not getting any type of cushion or breathing room. They're literally selling the 50 delta right at the money. Which indirectly tells you it's an aggressive position again, because if you have a 50 delta, it moves up $2, you just made $100. But anyways, that's another way to view delta. I know we just talked about viewing the probabilities through delta. I mean, it's nice to know that, just to know how delta functions. But I mean, at the end of the day, with the Tasty Trade platform too, it shows you the probability of profit automatically for you down here at the bottom. So obviously, you know, that's a probability of profit. Now let's look at this delta right here. This is showing negative 7.35, and you see it says negative 7.35.
Negative 7.35.
Yeah. So before you send a trade through, keeping an eye on this is something that will help, because it lets you know how aggressive your position is. So if I have a negative 7 delta, what is that also telling me? How much money am I going to make if this underlying goes down $2?
What, 14.7?
Yeah, you don't have to do decimal.
Oh. So $15.
About $15. Yeah, bucks. 14. I said we ain't doing the decimal, so 14. But anyways, yeah, 14. So this will let you know how aggressive a position you also have on. So now if I go to 530 and I want to sell the 535s, now let's go 525s and 530s. How much am I gonna make if this underlying goes down $2?
16.
Yeah, $16. Not much of a big difference, but it just helps you, know how aggressive or how bearish you are. Anyways, you are correct, sir. You are correct. No, but for real though, the reason why that's super helpful is because eventually we're gonna get into selling butterflies, broken wing butterflies, and setting those up isn't gonna be as simple as these easy put spreads. And that's where you're gonna be like, wait,